We're going through the classic trend that most European countries are going through. Spain's going through it slightly quicker than others, I think. Spain's very good at adapting to change, and it's being led by a number of major brands in Spain, so like Inditex is the one I've mentioned before. And as a result, shopping centres are being re-geared and restructured. Some of them are doing it quicker than others. The same with retailers. Some retailers are far quicker at adapting to this new paradigm, and others aren't. So that not just only is happening to retailers, it's also changed the whole view or thought processes with investors. I find a lot of investors, unfortunately, just follow the crowd. Some investors are prepared to jump that trend and change, but most investors' money, institutional money, is quite sensitive. It's shy of change, and so the last one to move has been the investor. But the investor now, particularly over the last 6-9 months, is very much now will only buy retail if it fits the three pillars, or the three major areas which we've talked about today and yesterday in this event. Obviously location, and it still is, location, it's fundamental. The second one is follow the retailers, even more so now than the past, because retailers are going through this restructuring where they need their strategic locations as well as their internet e-commerce business, and both go together. They can't have just one without the other. And then the third one is you have to have centres that give your client base, your family, your catchment area that experience. So investors know they need to have the wow effect, the follow the retailers, and the right retailers there with the right fit outs, and it has to have the right location. And the order is obviously location, retailers, and then the image, the right image and the right experience. And most retailers now will only buy if their centres fit those three areas. So there's a trend to be far more demanding on what they're looking for, exactly the same as retailers. And we're now getting a shift in what is difference in pricing. For the right centre that fits these three areas, the pricing still is very strong yields. For those centres that don't fit the bill on those three, then the pricing starts to change. So there will be winners and losers like in all other European countries. The investors that have that creative style, the creative angle, they'll be able to move centres, provided they've got the right location, into the realm of the other two. So over the next 2, 3, 4 years, we'll see a lot of restructuring within centres to fit the bill for those three as it moves up the chain to the more institutional money. But there's a gap. There's very few prime product in Spain, like in other European countries. And so a lot of the work has to be down to real asset management and real creation of ensuring your property applies to those three, not just for your investor end product, but for your retailers and fundamentally for your clients, which is what we're talking about today all the time. I personally don't like to talk about rents and cap rates. You really need to start talking about how you convert that centre and increase footfall and increase dwell times. The rest is secondary, and it naturally comes. The rents will follow on, and I think investors not so much. Retailers definitely want that. Customers have always wanted it, and I think investors, the day they start to put in their capex a line that says technology adaptation, that's the day when we'll know shopping centres have moved to that next generation.